When you start a business, you usually make no revenue at all, while you always need cash to pay at least your first employees and yourself as well. You may also have to invest in building your product or in marketing in order to get known from your customer. It means you need capital. And it's the same when your company is bigger but not profitable because it has not yet reached its critical size. What venture capital firms do for entrepreneurs is providing this capital to support startups from their creation to their profitability. They invest in the company and get shares. They take the same risk as the founders. It means that if the company fails, they lose all their money and they only win if the company succeeds. There are different kinds of VCs depending on which stage they invest. It can be seed stage or early stage with revenue startup which needs money to finance product development or to hire the first employees or to finance the first marketing campaign. There are also VCs that are interested in startup at a later stage when the company has already some revenue but still needs to grow in order to reach profitability. In that case, the company has a proven business model but needs to scale. To scale, the startup will have to structure its organization, which usually implies to hire middle management and then to invest massively in marketing in order to grow its business as fast as possible. It costs a lot, it's quite complex, and this is typically where VCs can help entrepreneurs not only with their funding but also with their experience, with their expertise in scaling up a company at a very fast pace. An e-commerce startup can contact tech-oriented VC funds and especially those who are focused on web. Entrepreneurs should look for VCs not only for the funding but also to get support. Indeed, VCs provide feedback. They challenge the CEO, they challenge the strategy of the company on very diverse questions like, for instance, positioning, pricing, or user experience. And as they have a very broad view on the e-commerce industry, they usually know what the right metrics to follow are and where the company should go in order to reach profitability. It can be growth margin, conversion rate, or maybe customer acquisition cost. And that's why some VC can really help the entrepreneurs to grow their business. And that's why entrepreneurs should really take care of choosing the right VC for their startup. Keep in mind that your relationship between you and your VC will last a very, very long time. There must be a mutual human fit between you and your VC as person, as well as a good fit between your business and the VC firm expertise. It's a relationship. It's built on trust and respect. You will need to be able to rely on him from day one until the exit. And as e-commerce is generally a very competitive market, you need to get a VC firm able to help you to move faster and smarter than any one of your competitors, and also to help you to avoid mistakes and deadlocks. Today, thanks to e-commerce platforms like Prestashop, it's quite cheap to start an online shop with very few capital and to make money from day one. The merchant may then improve progressively its e-shop and then get funding from business angel. As VCs, we commonly consider that this is the best stage to measure the entrepreneur's true capacity of execution. And we see there outstanding people making incredible things with very few money. And that's why bootstrapping its company is a good way for the entrepreneur to demonstrate its ability to execute and to prove its model. It will be easier for him to convince VCs as he has figures to show, as its company has already some customer or revenue, and as its business is growing. There are three ways to contact a VC. The simplest one is to use the contact address on the website of the VC firm. Another way to contact a VC is using a placement agent. It will provide you two benefits. The first one is that it will help you to make your startup looks more appealing for VCs, The second one is that it will help you to target the most pertinent funds regarding what you do and how mature your company is. Finally, there is a third way, which is mutual relationship, and it is probably the best way to use, provided you know some people we know the targeted VCs, and I think that it is the most efficient way to proceed. The VC investment process is by construction a very selective process. For instance, at Serena Capital, we receive approximately 1,000 investment proposals every year, on which we usually make only 4 to 6 investments. The selection criteria depends on the stage of the company and on the investment strategy of the fund, but the VCs usually expect several things. First, that the startup, product or service corresponds to a true and real need from a big market. Then, that the company has been already able to convince its first customer and that the business model is proven or is about to be, and that it is a scalable business. And finally, the VC will also ask if the company has already some of its KPI that demonstrate some kind of traction amongst its customers. When your business deals specifically with e-commerce, the VC will certainly have a very close look at metrics like your customer acquisition cost, your repeat and conversion rate, or your gross margin and your contributive margin. During the first pitch, the entrepreneurs need to be able to explain very simply what they do. The slideshow needs to include at least something about the team, the product or service provided by the company, its barrier to entry, and its competitive advantage. They also need to talk about their market, how big is it, who are the competitors, and what is the competition dynamics. And at last, they should talk about their business model, their growth strategy, and about what they will do with the funding. Remember that it is an introduction to your company. It is just here to arouse curiosity and interest from the VCs. So don't make it too complex or too long. A very short and simple presentation can really do the job very well.